The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show like we always do with the German DAX. As you can see, we've been in a minor downtrend here this week. We've had a pretty good corrections. We're having a little bit of bounce backs, but that's just a normal part of this. This is just shows you that this market looks, technically just like any other, big market. As long as you have a lot of volume and a lot of liquidity, you cannot tell me which one of these markets are because all of these chart patterns are the same. That's just a statement of fact. Anyway, we will watch these as the reason why I start the show with the DAX is that we have several people in the Tiger Den that trade the DAX, very aggressively, and they asked me to show it. The chart that I show you comes from one of my students in the UK who only trades the DAX, and he does it extremely well. And so each morning he forwards on his 15-minute and hourly charts, and so it's very simple for me to just, post it into the room to show you, what he's doing. But you notice how these lines, it's just amazing how they touch these parallel lines so easily. And since we're on parallel lines, I just wanted to bring something to your attention. Part of my studies through the years was when I was at Conti Commodities, first started trading, back in the late 60s. I would go down and visit Don Mack down at the, oh my gosh. Oh, well, the brain is slipping this morning. Anyway, I'll remember in just a second. But he had a huge library down there. What was it called? It's called the Institute for Investment Science now, the people that he sold it to down in Orange County. I don't remember what it was. I'll think of it in a minute. But I'll post this chart in here because this is a chart that was done. It's basically what... these are parallel channel lines. They're also known as Andrews lines. Alan Andrews was a student of Roger Babson, and Don Mack had all of Roger Babson's stuff. And Babson was he was sort of the Carl Icahn or Warren Buffett of the 1920s and 30s. And in July of 1929, he became extremely bearish on the stock market, and yet the stock market, went basically vertical from July to September 3rd. And of course, he proved to be right. Well, what Babson believed that everything was related to Newton's action and reaction, and he was heavily involved in the life of Isaac Newton. And Babson made millions and millions of dollars. He started Babson College, which is still there, the Babson Institute, which is still there. And he left a great deal of money to charity. But he was very, very heavily into the works of Isaac Newton. As a matter of fact, what he did was he went to London and bought all of Isaac Newton's personal things, the bed and all the other stuff. And the bed that Newton slept in, this big oak bed, the headboard, on the back of the headboard was the spiral Mirabilis, the Fibonacci spiral that you see. And in Newton's notes and stuff, Newton believed that this was the secret to reincarnation. I don't know that metaphysical stuff, but that's what he thought about. But getting back to these Andrews lines, in the early, mid-1970s, I was at Drexel at the time. Must have been, 70. No, wait, it was, I'm losing the time frame. But anyway, I went to visit John Hill down in Hendersonville, North Carolina, like I used to do several times. And since I was down in that area, I went down to visit Alan Andrews down in Florida. And just to, see who he was and everything. And he was very much like Jim Elder. John. Whoa, time out. We have to take a little coffee break here. Anyway, like John Ehrman. He studied the market to great deals, but he didn't trade very often. He did trade, but not very often. And we talked a little bit, and he was in his 80s then, and he basically, showed me some of the things that he did. And remember, this was before we had computers. Everything was by hand or commodity perspective, or I don't remember the stock charts that we used to get, but what was it? Oh, dear. Boy, I'm really slipping today. Watched too much basketball last night when Arizona lost. But anyway, he would watch these lines. Now, Andrew's lines really work, folks. But if you look at them, they're showing how the market act. Wow. I better call a timeout. Yes, last night. The reason why I'm bringing this up is Greg Fisher was on Denver Trading Group with Ron Rossaway last night, and he had this. His presentation of the Andrews lines. He wrote a paper for his MBA thesis on the Andrews lines, and you can go and see that. If you want to see it, just go to Median Line Study, and you'll be able to see the whole thing, and it'll give everything that it was looking at. So it just gives you an idea of how things work. This is this is one of the reasons how Twentyman, found these Twentyman lines. But Twentyman was doing Gann work, and Gann did, all kinds of work on 45-degree angles, that type of thing. But the most amazing, I'm getting off to wow, this is really ridiculous. I'm going to have a timeout here today. By the way, I'm not going to do this show, but I will do another show at the 11 o'clock hour for Basil Chapman. But Twentyman's claim to fame was he really studied Gann very, very heavily, because he would go down to Don Mack's office, and there were Jerry Baumring and a bunch of other guys would be there. And Don had the most fabulous library anyone had ever seen. And he had he had everything. He really did. And what happened was they studied, Gann for quite a bit. But the most amazing thing about Gann is he wrote tons and tons of stuff, but never one time in all of the work that Gann did he ever mention the word Fibonacci. And I mean, believe me, this was ingrained in his psychic, because he was a 33rd degree Mason. He had gone to Egypt and studied the pyramids and stuff. During the 1970s, we talked to two of his three children, both of the boys. One was a dentist, the other was a bond trader for Dean Witter. And the daughter wouldn't even talk to us, but the boys did. And, they told us that they lived a very, very comfortable life down in Florida. He had a yacht and other stuff. And but the fact that, people say that Gann made $55 million and, all this kind of stuff, and it was offshore. They didn't even have offshore back then. So, that part is, really not true. If you look at his estate, he left an estate. He had $250,000 in cash plus his houses. He had two houses. He had a yacht called the Coffee Bean and some other stuff. So he had done very, very well in the market, but never did he ever mention the word Fibonacci. And him being a Mason, that's ingrained in their culture. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the stock market through the eyes of the New York Stock Exchange Index. As you can see here from this hourly chart that we have up, let's try it again. It's a 30-minute chart, the New York Stock Exchange Index. You'll notice that we had this gap back on March 1st. That basically, everybody that bought it between the first and the second now has substantial losses. You'll see the market broke down into the 14th of March. We had that two-day rally, went in the 16th, stopped exactly at the 78% level, and then came down in ABCD format, giving us the bottom down on the 22nd. But to me, the key to this is the fact that on March 23rd, we had that two-day rally between the 22nd, 23rd. We stopped exactly to the tick, to the 382 of the high we made on March 1st. Now, folks, if that's going to be the high, in other words, if we don't take out yesterday's high and we take out yesterday's low, boy, you're looking at a market that's really going to get hit badly. So, if you close badly today, get ready into next week because, this thing could really cascade to the downside. Now, how far it's going to go to the downside, I'm certainly not 100% sure, but if we take a look at the Dow Jones, and we will just now, we'll put it up here and take a look at it, we'll see that we would be looking at our filling the second gap, that's just down around 20,100. So this is going to be the next target if we start to fill these gaps. And all these gaps in the Dow Jones will be filled. The other thing, the people are saying that in the financial pundits are saying this is all related to this Obamacare bill and the vote. Folks, that's a total bunch of malarkey. These have their own cycles. They're in there. We might not know them all, but it has nothing to do with the news because the news follows the trend. So that's neither here nor there. So remember that these cycles are there, they're going to be there, they're going to stay there, but they really don't have anything to do with what the news is. Now, the news will affect the market for a day or two, like we did on March the 1st, but for long periods of time, it's certainly not going to make a whole lot of difference, much like what the Federal Reserve raising interest rates doesn't make any difference. Interest rates have been going higher, for over a year and a half, but they're playing catch up. So it's a whole different thing. Now, one of the things that someone asked me was what was one of my most frustrating trades that I ever had. I know the answer to that one. That's easy. That was the gold market in 1980. I had been long gold ever since I started working at Drexel in '76, and we had amassed a very large position in gold and silver. And I had sold the gold and silver the first week of January of 1980. Gold didn't top until the third week on the 20th, and it had gone up over $200 and some an ounce, maybe even more. Yeah, it was more, I believe, because we were out of gold at around the 670 level, somewhere in that ballpark in early January, and gold proceeded to go $200 higher, topping on January the 20th, 1980, at the price of $865 an ounce. Well, I had been selling the gold, all the clients that I had, and I had full discretion on these folks, and we had this was our plan. We had made a lot of money, and we wanted to sell it in January because that means that the tax wouldn't be due until the following year. So you had 18 months of tax-free, and if you use the silver hedges, in other words, go long 1 month of silver and short another month and close out the losing side, and then put the spread back on, you didn't have to pay taxes at all. You just kept rolling it over year to year. Well, that ended in about 1989, I believe, or 1990. The IRS ruled against that, and you got grandfathered into some of these humongous losses. That were there. They said they weren't any good, but you had to fight them. But anyway, let's get back to that. But the frustrating part was I had two clients that I was really close to. Trevor, who was he was a very wealthy young man. He made all of his money in car washes and in what was it called? Junkyards. He had about 5 junkyards all across Southern California, and it was a cash cow, and he had done extremely well. He was in his 40s, a little bit older than me. He was a few years older than me. And when gold took off, we had made a lot of money, and he wanted to stay in the gold, and I convinced him to get out. And, of course, it went up another $200. Folks, he never spoke to me again, ever. And we had taken vacations together as a family to Hawaii and places. I mean, it was just I couldn't believe it. He just took it really personal. Now, gold, after it hit 865, it went to 400 over during 1980. I think it was 82. It started to break quite a bit, but it just really bothered me. There was one other gentleman there that also was very angry about it. He later on, after he'd saved a lot of money, he later on, started to converse again. But that one really bothered me, and it reminded me when I first started working for Drexel, the director that hired me. Basically, it was Joe. Oh dear. Oh my gosh, boy, these names are really slipping. I don't know if that's a sign of anything or not. I can see him sitting there, but oh my gosh. Oh, Fred Joseph. It was Fred Joseph, the guy that hired me from Drexel. He was one of the directors, and he told me, he said, look, you can make money for people, you can lose money for people. The key is don't lose all their money. And he said, this is our firm, the creed that we have here at Drexel Burnham is just don't lose all your money. And then Fred would say to me, I will tell you something. He said, there's one thing that you can do that will really make them angry. And I said, what's that? He says, if you convince them to do something, to take them out of an idea that they have, in other words, they want to buy stock at a certain price, and you talk them out of that, and that stock goes up, he said they'll never forgive you for that. And that's what happened with Trevor. He was absolutely right. So ever since that time, I never try to talk anybody out of a trade, because if they want to do it, it's basically one of those things that You just don't want to get in the way of it. So keep that in mind when you're doing some of those things. And the other thing is when you're doing a radio show like this, people will ask me for recommendations and stuff. I really can't do that, folks, because you have to take the responsibility for your trades. I give you some ideas. That's what the charts try to do. You try to see the symmetry and the patterns in the thing. But to tell you what to do, it's a little bit more difficult. To what to think. Yes, Mike Milken did go to. He graduated from Wharton, and he was Mike and I are the same age. He started at Drexel 3 years before me, and he was a real genius, and he still is. But anyway, let's get back to that talk about Fred Joseph. Anyway, take the responsibility for your trades. Like Twentyman says, defy human nature. Do the work yourself. So if you do that, then you're going to be far better off. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of cattle that we looked at the beginning of the week, how we gapped above the 78% level, And the price objective on that is like 114, and as you can see, we hit 114 yesterday, closed a slightly lower, but we should see a back off in cattle from this level. But the main reasoning for this chart is the fact that when it gaps above those fib points like that, much like we did in some of these other markets on the way up, you have to really pay attention to that, because that's really telling you that the market wants to go either a lot higher or a lot lower, especially if it gaps, below those levels. One of the questions that someone's asking me today in the den is how I got involved in the pharmacy school. When I got out of high school and started college, I worked as a scrub nurse in a ORT at St. Anthony's Hospital in Terre Haute, Indiana, and I kept that job for very all through my my years at school there, and then that's how I got into it. But I was going to go to medical school because that's what my mother wanted me to do, and I knew if doctors made a lot of money. This was before I met Dr. Noblet. And what happened was I got accepted to the Stritch Medical School, which was part of Loyola University in Chicago, and I also got accepted in Indiana. And I was going to pick the Loyola School because my grandfather and grandmother lived near the university, so I could live with them. But what happened was, in my senior year of college, as I was working as a scrub nurse, one of the doctors that sponsored me to go to school, to go to medical school, Dr. McIntosh, he really tried to get me. He didn't want me to go to medical school. He really didn't. He was a good doctor, nice GP, but he didn't like medicine. And one night we had a little 8-year-old boy that had an appendectomy, and the little boy died on the table. And he made me go out with the family into the waiting room and to tell the family that this little boy had passed away. Folks, I never got over that. That was it. I went back to talk to my mother, and I told her, I said, I can't do it. And my mother didn't speak to me for 3 months. And she was so angry with me, the fact that I had gone out through all this work. And so all I did was I had to take a few extra classes and, got through pharmacy school and stuff. And then I got an MBA and all that stuff. But anyway, that's really why I did it. And I'm really glad that I'm not a doctor. I saved a lot of people's lives by me not being a doctor. I can promise you that. But this is being a trader is much easier than being a doctor. Just being a trader, you work for yourself, and sure, the first of the month you come up, you got your bills like everybody else, you got bills to pay, but that's neither here nor there. But anyway, that's pretty much how I did it. I don't want to one other, since we're on that topic, one of the questions that someone emailed me last night was what was some of the memorable experiences at the Conti Commodity Office during 1967, and from there on, this was must have been 1969, and it was on the corner of Wilshire Boulevard and Westwood Boulevard. There was the Howard Hughes building was on the east side of the street. On the west side of the street was the new McCulloch Oil building. It was one of the largest buildings in Los Angeles. It was 20 floors high, and Conti Commodity had the whole top 20th floor for their trading things. That's where you had the Bunko Ramo boards. But on the other corner, right next to the Howard Hughes building, was Ship's coffee shop that was open 24 hours a day. And you could go into that coffee shop just about any time and see somebody famous. And every morning, John Wooden, the great coach from Indiana, who was the coach of UCLA, would go in there with some of his staff, and he would have coffee and breakfast. And me being from Indiana, I said hello to him and got to see him a few times over the years. But it was really really great. By that, he has a great book, The Pyramid of Success. If you want to, this is how he trained his great basketball players to be great men. But that Pyramid of Success book is really good. It's basically some of the principles of Napoleon Hill and W. Clement Stone, but it's a fabulous book from somebody who was really a wonderful human being. He lived to be, I think, 98. Was really a really nice fellow. Anyway, we would go over to ships and have breakfast once in a while. And my best friend at the time was Jay Cross. Jay was the very first programmer for Commodity Corporation back in 1964 when they were first starting the place with Amos Hofstadter and Helmut Wiemeyer and what was the guy's name? Not Paul Samuelson, Milton Friedman. All those guys started Commodity Corporation, and Jay was the first programmer, and he was very close to Amos Hofstadter, and that's how I got to meet Amos, was through Jay. Well, we were having breakfast, and as we left, this was like 7 o'clock in the morning, there was an accident on the corner of Wilshire and Westwood, and it was a little Honda. These little Hondas were selling for about $1,900, and this was an old beat-up car. It wasn't a Honda, but it was an old beat-up car, probably I don't know, it might have been a 57 Ford, maybe about a 57 or 58 Ford, and the car was really smashed up badly, and nobody was hurt, but the young lady driving the car that was hit by the other car, she worked in the building, and she was just hysterical. She was crying like crazy and everything, and she had worked in the building somewhere, and I'd seen her, and Jay went up to her, and he said, what's wrong? And she said, the world's coming to an end, this is the worst thing that can happen to me, I don't have insurance, blah, blah, blah. And she said to him, my husband beats me, and he's gonna kill me for this. And so Jay took her upstairs. We went together, and she worked for an attorney up there. And then after he took her to the office and calmed her down, he says, "Look," he said, "let's go over to the valley." And he said, "I want to buy her a new car." I said, "What?" He said, "Yeah." He said, "I want to buy her a new car." He said, "What are you going to mean, buy her a new car?" I said, "You don't know who the lady is." She said, "Look, she needs help. I make a lot of money, so I'm going to buy her a new car." I said, "Okay." So we went over to the Honda dealership, and he bought her a Honda for $1,900 with a little Honda Civics, one of the cute cars of the year. They're really popular at the time. And they brought the car over to the McCulloch Oil building, and when they took the keys up to give them to her, she wouldn't accept it, because she thought something was wrong, and she worked for an attorney, and finally she went to the attorney. What was his name? Ken Purcell was his name, and he came over to the Conti office to see Roy Fassel, who's the manager. He said, "What the hell's going on here?" He said, "This crazy guy came in and bought a new car for my secretary, and she doesn't even know him." And Roy said, "Look," he said, "he's got the money, so take the car." And she did, and she was happy, so that was good. But that's just the kind of guy he was. He was just the greatest guy in the world. We lost him the same day that O.J. did his bad thing in June of that year, of 1995. Jay was in his car in Memphis, checking out one of his farms, and he went across a state highway. They think he fell asleep is what happened, and he got hit by a big truck and he was killed. Anyway, we'll just the way that Amos Hofstadter died. Okay, we're going to take a little break here. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back, and we have a caller from Somerville. Mike, are you there?
How you doing, Larry?
I'm above ground, staying away from open graves. What can I do for you, my friend?
All right, listen, Larry, I'm going to try to get through this, but I'm a very sentimental guy, and I just want to say this, see if I can get through it. Listen, Larry, I know it's tough to fill an hour, and I just want you to know that I am a high school graduate from Somerville, Mass., and I am fascinated by your stories. So,
thank you very much, Mike. That means a lot to me. My stories is all I have to live on, so I certainly remember them anyway. It was very interesting. So you're from Massachusetts. That's right outside of Somerville's, right outside of Boston, isn't it?
yeah, I'm like Tom's neighbor. He was from South Boston. I'm actually Basil's neighbor too. He's like 2 towns over. So. Yep. All the important people grew up down here, Larry.
I'm sure they did. Now, are you close to the Harvard campus?
Oh, from where I grew up, I could walk. When I used to walk with my child, we used to walk by there every day. Yeah, that was part of my walk. I'd walk right through Harvard.
Yeah. Yeah, my daughter lived in Somerville. She used to walk to school to Harvard. I always say I went to Harvard, but I went to Harvard for lunch. My daughter went there to learn. So, but that's a really beautiful area. A lot of history through that area. But thank you for the compliment. I appreciate it. I have a lot of, when you live to be old, that's the only thing you got is your stories that you have to fall back on. And so it's a fun thing to do. Some of them, when I was getting ready to take Basil's place, I figured I had to do some things different than what he does because he's a hard act to follow. So I thought I'd share some of the crazy things that happened to me, over the years. So I appreciate the call. And believe me,
Larry,
not everyone appreciates it, Mike. I can promise you that.
No, Larry, listen. I just had to say one thing because I got choked up a little bit there. I never miss your show, Larry. I never miss your show. I listen every morning. So just because people aren't calling in, don't think we're not out here.
Okay, I'll send you that $20 just as soon as I'm off the air today, okay?
All right, pal. Keep up the good work. Keep up the good work, Larry.
Thanks a lot, Mike. I certainly appreciate it.
Pal.
You bet.
All right. Bye-bye.
Okay, thanks. Boy, I got to be paying $20 every day for these compliments. I'm going to run out of money. Okay, let's move on to some of the other things. This U.S. dollar is what's interesting, folks. As you can see, it looks like we're heading lower. in the dollar. I think we're going to get down to that area of around 97. If you listen to John Logan's show with his amazing chirping birds, I don't know how he gets them to come on live every day like that, but that's really a great touch. We have hummingbirds here, but they're on the outside, so I can't get them to come in to perform. They do get into the house, though. Once in a while, you leave a door open, and one of the hummingbirds will come in the house, and he'll spin around, look at all the rooms, and then go right back out again. So anyway, the dollar index looks like it really wants to go to this area of 97. But we are very, very overbought now in the British pound and also in the euro because we've been up for several weeks. So don't be surprised to see some type of a counter-trend rally here in the dollar. In other words, when the dollar rallies, the euro goes down, but that's just usually going to be short-term. 3 to 5 days is all that we would be looking at. That's from a technical perspective because we never know whether they're going to go up or down, even how much you're going to make on a trade. The only thing you can do when you're trading is to protect yourself against loss. And that's what the whole trading is all about. Now, I had several questions about the wheat because we were talking about wheat yesterday, and I just wanted to bring this chart to show you what we're looking at here in the wheat. I know it's not the new moon doesn't come in till Monday, the 27th, and so this is when it's expected. But this pattern completed yesterday at the 435 level. And the low was 435 and a quarter, but it has a lot of things to say that this might be a very good spot to buy wheat. Look at it, folks. You've got an ABCD pattern measuring from February into March. That's a whole month forming that pattern. It's a perfect 1.27 from the expansion from January to February. It's a perfect contraction between December and March, exactly at 78% level. It's a head and shoulders pattern from September through December to March, with each shoulder, with the right shoulder being higher than the left shoulder. I mean, this is stuff that you can't make this stuff up. So it either stops right here or, it's getting ready to, go down and make new lows. So this is a situation where everything's lined up on the right side of the table. The $64 question is the table going to be set, or is the table going to be removed? We don't know the answer to that. This is what trading is all about. It's about how much you have to risk, not how much money you can possibly make. So remember that this is all about probabilities, nothing more than that. That's all it happens to be. So remember that. I think that's an important thing, to keep in mind as you're looking at some of these things. Now we're getting a little bit of an opening bounce here in the stock market, folks. This stock market really looks negative. For the reasons that I said at the start of the show, where we had those 382 retracements. We could not even make a 382 retracement in the Dow Jones Industrials. We did it, of course, in the NASDAQ very easily. It was able to make a 50% retracement. But the overall stock market, when you look at it with the New York Stock Exchange Index, it could not do it. There was just no way that it could get that strong. So this is telling you that the underlying tone of the market is very weak. Now, they're blaming the sell-off days to the Obamacare thing not being voted or whatever it happens to be, but that's just the news, folks. And the news follows the trend, and that's the main thing that you want to be watching. Okay, now I just wanted, since we're talking about the wheat and some of this other stuff, I just wanted to show you the same type of pattern in the soybeans that we're seeing in the wheat. But notice that we had already hit this 61% retracement in beans back on the 13th of March. We rallied very, very minimal for 3 days, and now we've went below the 78% retracement. So this tells us that beans want to go a little bit lower, whereas wheat could be, bottoming. So whether these patterns are going to complete like this is something to let the history tell us, but this tells us that once we went below the 61% retracement at $10 a bushel, it immediately broke 5 cents a bushel, $250 from breaking below that point. So if you had to be in July beans at that time, your risk here would have been very, very small, only about 5 cents. The wheat happened to make a has started to work anyway. Marshall's asked a question if am I going to have another guest on today? No, I'm not, Marshall. I am on my own today for Basil's show, which will be from 11 to 12. But I have some guests, I believe, next week. I have to check the story or check the schedule to see who I have on next week. No, I don't. No, I don't have anybody on next week. I have a guest here from Chicago the whole week. I've got a big hedge fund guy that I know is coming to visit Sarah and I. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and right now the wheat is up about a nickel. So if you bought the wheat, just put your stop at break even, at 436 and see what happens. That way you're in a risk-free trade, because now the 5 cents that you made is in your pocket, and they can take it away from you at any time, so you don't want to increase your risk from 5 cents to 10 cents. So just put your stop at break even and reassess it, when we come into the new moon on Monday, and that's going to be a pretty big one, I would believe. We had a question about our good friend Norman Winsky was on yesterday during the Basil Chapman segment, and he was talking about this big configuration that's coming in toward the ends of March. I don't remember all of the things. I will check it this weekend, but I believe we have some big planetary things related to Neptune, which is the ruling planet for bonds and also for crude oil. So that should be very interesting. I believe that is around the end of the month, but I'll have more on that when I finish this weekend's work and, get ready for the letter and stuff, because then I can review, the main things that could be happening, because I believe that it has related to the relationship of Neptune and I believe Uranus, but I'll double check that. I'm not sure exactly. I'll get it for you right now. Then the last chart I want to talk about, folks, here was the transportation index. As you can see, it's gone crazy ever since the election, and we did make a butterfly pattern top up here on the 27th. If you remember, that was a new moon also. Then on the 1st of March, the market went crazy. That's where the actual high was the next day, and that's what's occurred. Now, you can see we came down really hard. We stopped exactly at a 38% retracement in the transportation. We made a 50% retracement, of course, in the S&P 500, as you remember. But these are the ones that you want to watch, because we're down for several weeks now, and we haven't been able to bounce very much. So this bounce is what you really need to watch. We should not take out yesterday's high if it's bearish.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.